The plant assets and accumulated depreciation accounts of Pell Corporation had the following balances at December 31st, 2008. Land, $300,000. Land improvements, $174,000, with $41,000 of accumulated depreciation. Building, $1,440,000 with $290,000 of accumulated depreciation. Machinery and equipment, $1,070,000 with $335,000 of accumulated depreciation. And automobiles, $140,000 with accumulated depreciation of $110,000. Transactions during 2009 were as follows, and we'll cover Transaction A on this slide. On January 2nd, machinery and equipment were purchased at a total invoice cost of $280,000, which included a $5,300 charge for freight. Installation costs of $26,800 were incurred. Okay, well, how do we come up with the increases to machinery and equipment? We take the machinery and equipment cost, including freight, of $280,000, and we add the installation costs of $26,800 to come up with a total increase in machinery and equipment from this transaction of $306,800. On March 31st, a machine purchased for $58,000 in 2005 was sold for $38,500. Depreciation recorded through the date of the sale totaled $23,750. So we know we have a decrease in machinery and equipment of $58,000, the original cost. And then we need to calculate the gain on the sale of the machinery, or loss, whatever it turns out to be. And we see that the selling price was $38,500, and the book value at the time of sale, equal to $58,000 less $23,750 in accumulated depreciation, that amounted to $34,250. So the $38,500 selling price less the $34,250 book value results in a gain on the sale of machinery of $4,250. On May 1st, an ongoing maintenance expenditure of $46,000 was made to repave parking lots at Pell's plant location. The work was necessitated by damage caused by severe winter weather. Alright, well, this involves regular ongoing maintenance, so there's no future economic value, and that means there's no increase to be recorded in any assets. On November 1st, Pell acquired a tract of land with an existing building in exchange for 10,000 shares of its common stock that had a market price of $38 per share. Pell paid legal fees and title insurance totaling $22,000. Shortly after the acquisition, the building was raised at a cost of $25,000 in anticipation of new building construction in 2010. Alright, we need to determine what was the total cost of land and how much are we going to increase the value of land on Pell's books. Well, we first consider the consideration given for the land, which was 10,000 shares at a share price of $38. Then we add in the legal fees and title insurance of $22,000, because that's also a necessary cost and part of the land. And then we also include the building raising cost, because that gets the land ready for its intended use. When we add these three amounts together, we come up with $427,000 as the total cost of land. On December 31st, Pell purchased a new automobile for $14,250 of cash and trade-in of an old automobile purchased for $18,000. And the old automobile was originally purchased in 2005. Depreciation on the old automobile recorded through December 31st of 2009 totaled $13,000. The fair value of the automobile was $2,250. Okay, well, to determine the value of the new automobile, we need to increase on Pell's books. We need to add in the consideration given for the new automobile. And that included cash of $14,250 and the trade-in value of the old automobile of $2,250. So the total value of the new automobile is $16,500. Also note that we need to decrease on the books of Pell the value of automobiles at its original cost of $18,000. We also need to calculate the gain or loss on the trade-in. The book value of the asset traded in was $5,000, $18,000 of original cost less $13,000 of accumulated depreciation recorded up until the day that the asset was traded in. And then we subtract out the market value of the old automobile, $2,250. So we're able to calculate a loss on a trade-in of the old automobile of $2,750. Okay, and after we've gone through all of these transactions, we're able to see the total effects of all the increases and decreases on the various fixed asset or plant asset accounts.